Yo, what's up, guys? It's your boy Looney. Today, I'm diving into one of the biggest reasons investors fail. And it's not what most people say. What it actually is that most investors or traders even often quit right before they win. So we're going to be talking about that moment when you've done a lot of the hard work, but you're tired, you're frustrated, and you decide to bail. And this often happens just before the breakout. And to make it real, I'm going to look at Riot, one of the positions I hold, and it's a stock that's battled, it's dropped, but still has a story. And if you're invested or thinking about being, this is going to be a relevant video. But before we get into this, quick shout out to the Discord. It is free to join. And I also offer a premium membership for $8 a month, and you get access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links are in the description. So let's be honest. Investing isn't smooth. It's a grind. It's a grind of red days, sideways months, and confusing headlines and just almost there moments. What happens? See, there's two things. One is emotion kicks in. You see losses or slow progress, and you think maybe this isn't for me. Or the second thing is you stop believing. You lose conviction in your thesis. So I'm going to use Riot as an example, which is down pretty recently, and it is going through some volatility, and perhaps some new investors are getting frustrated and might even bail. In the past week, it has dropped 20%, and now it's trading at $16. Yet, some analysts still see an upside if you go to this digest and just do your research on other websites of upward prices of $26. And if you leave here, you might miss that opportunity of $26. Now, here's the key, because many quit after the pain phase. And this is just before potential reward. So recently, Riot had pretty good earnings. It had a Q3 revenue of 180 mil versus 170 or 169 million expected, which is pretty good. But the stock still has taken a hit. And this is because of execution risk and just overall exposure to crypto and crypto volatility. But if you look at the roadmap, Riot is pivoting. It is pivoting to data centers for AI and HPC as well. It's still continuing its Bitcoin mining story. So for a Riot investor, I'm going to use Riot for this example, but you do have to hang through the consolidation, weather the sideways, weather the storm, and often stay when it's ugly if you want to be in a stock that's volatile like this and you see the long-term picture. Because this moment is where most people often quit. And this is what I would say to do instead, is to reevaluate your thesis. Do you still like the stock? And in my perspective, Riot, I still believe in its pivot and its long-term growth. And I see a lot of its things going on with crypto as a tailwind. And of course, there are some volatility. And if I didn't believe in it, I would have been exited by now. I'm already up like 100% or somewhere around 100%. The other thing is to stay disciplined with position sizing. Now, this is important. Yes, I am super bullish on Riot or stock like Riot, but I am being strategic. I'm not going all in at these prices. I already made all my buys at $9. There's no point of me increasing my portfolio diversity. So I do treat large positions like a series of smaller ones. I try to slowly add to my positions. I do look at support entry plus I look at the support entries, and it's kind of called the support entry plus plan. But mostly I look at selling puts on stocks that I'm comfortable with owning. That could be Zeta, that could be Riot, that could be SoFi, and I'm doing that too strategically. I'm doing dollar cost averaging strategies, doing different strike prices, and I'm comfortable owning these at the prices I choose. And if I get assigned, that's fine. If not, I get to keep that premium. Now, something else is to really think long term, not just quarter by quarter. because the big gains often come after volatility quiets and sentiment returns. We can look at something like HIMS. HIMS is down 10%. You're seeing a lot of people or a lot of FUD going on with this stock, with just the market affecting it. Even Trump even mentioned kind of opening up a competitor of this stock, and even its own competitor like Novo is doing pretty good. But that's what comes. That's what comes with investing and just stocks in general. They're going to go through headwinds. And that's why I want to say, don't let pain force decisions, because a drop in price isn't necessarily a signal to quit. The only reason you should be doing that is your thesis broke. So the takeaway is that the win often comes after the wait, because investing isn't about perfecting timing. It's about staying through the rough patch and being ready when momentum returns. And if we look at something like Riot, going back to that, because yes, there is some recent volatility, but I won't even go back further because I went through it a little bit ago. I owned it at like $9, somewhere around here, and it dropped all the way down during the April tariff down to $6. And I was truly just frustrated. I was frustrated that the stock was going down, but I stayed patient. And yeah, that's where many quit. They would have quit at the $6, and if you quit by then, you would have missed out on this massive gain of 150%. And I'm actually up 75%, so I didn't time it perfect, but I got pretty close to it. And I didn't panic. I was actually buying at $10, even to emphasize what was going on. Buying at 10, as it dropped, I bought more, and then I got to a point where I was like, is this stock just going to keep dropping? And I kind of ran out of cash at that point, and then quickly turned around. So if you want that win, you're going to have to build conviction. You're going to need to do your research, make sure it's a stock you want to own, and just overall ignore the noise, because you've got to keep trading your edge, even when nothing is going up. So yeah, the hardest part or the hardest time to stay invested is just before things get good. So I try not to bail when I'm close, when I see that there's fear and there's pain going on with the stock. Even something like, we could look at Open. Open might be even a good example, or a good recent example. I would say I FOMO bought into this, and I'm dealing with it. I'm dollar cost averaging down. I'm getting that average cost down, and I could still be down. I could still be down 40%. I was down 40% or 20% recently, and I just simply held, bought a little bit, didn't go all in, didn't do any sort of revenge trade, and just stayed patient. And now I'm pretty much break even. So yeah, recheck your thesis, stay disciplined. That's very important. And when it does pop, you're going to be there. You're going to be there to ride it. If this video helped, leave a like, comment below if you've ever sort of sold early or quit early, and tell me how you're staying in the game right now. Until next time, peace.